taxes for the self-employed in 26-27. Now we've had the Chancellor's budget. So there were some fairly big increases for self-employed people, so we're going to look at those. But before we do that, we do regular updates on tax and accounting issues. So if you would like to be kept up to date, then please subscribe to the channel, and it helps us and it helps the channel. So thank you for doing that. So there's a whole load of taxes that self-employed people can pay. So let's look at taxes for limited company first. So taxes for limited company start with company tax, which is corporation tax.
Yes, and the corporation tax on profits up to £50,000 is 19%. On profits exceeding £250,000, it's 25%. And profits that fall between £50,000 and £250,000, the tax rate is 26.5%.
26.5, that's a lot, isn't it? And then if you want to take the money out of the company, you pay
dividend tax.
Dividend tax.
And the dividend tax rate's 10.75% for income up to £50,000, and if it exceeds £50,000, the dividend tax rate is 35.75%.
Yeah, dividend tax is the one they're putting up, and it's the one that 11 years ago didn't exist.
Yes.
So dividend tax, thank you for that. So another way of taking money out of a company is to pay yourself a salary. So if you pay yourself a salary, what are the tax rates there?
So salary income up to £50,000, the income tax rate is 20%. Class 1 national insurance is 8%, which is deducted from the salary, and there is employer's national insurance at 15%. Which is what the company pays.
So that's a basic rate, so you're paying 20% plus 8% plus 15%. So what's that all add up to? 43%, is it?
Yeah.
43%, that's a lot, isn't it?
Yeah.
So what is it if you're a higher rate taxpayer?
So if you're a higher rate taxpayer, the tax rate is 40% on income exceeding £50,000, and employees' national insurance is at 2%, and employers' national insurance remains at 15%.
So that's, what's that? So 57%, is it? 57%, there you go. And I think it needs to be said that for some companies, very small payrolls, they don't pay the employer's national insurance, so they don't pay that 15%, at least on some of the income, so that can reduce your rates.
Yeah, so companies that are eligible for employment allowance would have an allowance of £10,500, which would be offset against the employer's national insurance. So you would only pay employer's national insurance if you've used that allowance, and we ensure that we claim this allowance for all our clients.
So the other possibility is that you're self-employed or in a partnership or a limited liability partnerships, and self-employed and partnerships are largely taxed the same, but they're taxed as self-employed. So if you're self-employed, then what are the tax rates now?
So as a self-employed, for profits up to £50,000, the rate is 20%, and profits exceeding £50,000 in the higher rate, the tax rate is 40%. There is self-employed individuals pay class 4 national insurance, and class 4 national insurance on profits up to £50,000 is 6%, and profits exceeding £50,000 is 2%.
Right, so that's a lot of numbers, isn't it? So we've got a 6%, we've got a 8%, we've got a 10.75%, we've got all sorts of percentages lying around, but that's not really what self-employed people are interested in. They're interested in how much do they get, how much do I keep, and how does this work? So if we go through the numbers and see how these taxes combine, so we can understand what tax you actually pay. So again, let's start with companies. So for company, the traditional way is that people pay dividends from company profits. So what's the combined rates of tax on that now?
The combined rate of corporation tax for a company with profits up to £50,000 would be 27.7%, which includes corporation tax and the dividend tax. And if the profits exceed £50,000 in a limited company, the rate of tax would be 34.4%, which includes corporation tax at 26.5% plus the dividend rate of tax, assuming the shareholder falls in the basic rate band.
Yeah, so 34.4%, that's a lot of tax, isn't it?
Yeah.
So if they're a high rate taxpayer, they're probably paying even more than that.
Yeah, and if you're a high rate taxpayer with the corporation tax plus the dividend rate of tax, the total combined tax rate was 52.7%.
52.7, so they're dead deigning to leave us with what, 47%, thank you very much. And that's for people who are earning 51,000, 52,000, and I don't think the people earning that sort of money are wealthy and really well off. But there we go, that's the rules. We're only here to interpret the rules, don't blame us. So that's receiving dividends. So what about if you have the combined rates, if you just receive a simple salary?
So if it's simple salary, the combined rate would be 28%, excluding employers' national insurance, assuming that it's covered by employment allowance. And the higher rate, combined tax for salary, would be 42%.
Yeah, but you're always going to be paying the employer's bit as well, so that pushes up to 57%, which with the highest rate we're going to mention.
One of the advantages of paying a salary is you would save corporation tax.
So if you're self-employed, what are the tax rates there?
So if you're self-employed, the combined rate of tax for profits up to £50,000 would be 26%, and for profits exceeding £50,000 it would be 42%.
Yeah, so what I'm hearing there is that the actual being self-employed is actually lower. So if the being self-employed is lower now than having a company, are you now suggesting to clients that they should be self-employed or have a company?
Yeah, it all depends case by case basis. Because there are several rates of tax, we would need to prepare calculations for each client, and it's case by case basis, and we would need to establish whether a company structure is beneficial for a client or are they better off being self-employed. Yeah. And this is what we are doing for our clients currently.
Yeah, and I think it really depends on if you can keep money in a limited company and then you don't pay high rate tax. You only pay high rate tax when you're taking it out, so that's a factor. Sometimes company car stuff can make a difference. Sometimes, how much you leave in the company. Sometimes limited liability can be important. So people really want limited liability, so that pushes them towards having a limited company, or that there are limited liability partnerships. Very good. So I think what we're going to do in future videos is go through some of those scenarios, so have a little bit more of a look at limited liability partnerships and some of the strategies that evolve as everybody thinks about it.
Yeah.
So please join us on future videos. If you want to subscribe, then please do. We'd like you to have you on board. If you got this far and you like the video, then please press the like button. Thank you.
Yeah. Thank you.